10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
What are the differences between Islamic bank and conventional bank? Islamic banking functions based on the Al-Quran. It's all about the contract and it's too straightforward to follow it. In Sharia law, the interest is completely prohibited and the asset is based on financing because making money from money and profiting from things considered immoral are totally prohibited in Sharia law. For example, charging or paying interest or profiting from alcohol are totally prohibited in Sharia law. Now, let's log in into the bank page we have chosen. The background of the bank, where it is the oldest and first local bank with the incorporation of the Kuang Yin, and the bank corporation was Kuang Yin Bank in July 1913, and it was established on March 1st, 2005, making it as a full-fledged Malaysian Islamic bank that has matured from an Islamic banking window operation. The demerger of the Islamic banking operation from RHB Bank Berhad was made under the Islamic Banking Act 1983. As the only owned subsidiary of RHB Bank Berhad, it is the key driver of Sharia business for the entire RHB banking group of offering a full suite of Sharia-compliant financial products and solutions to all retail, commercial and corporate customers. These enable the RHB Group of expand its range of product and services that were Sharia compliant to meet the needs of an increasing number of customers who were looking for an alternative to the interest-based conventional banking system. Now, we're gonna see how RHB Islamic survived without gaining any profit from the interest, or known as riba, where the product and service cycles uses the Mudarabah and Musharaka and Wakalah and return to the Mudarabah cycle. What is Mudarabah and why RHB chose Mudarabah in the banking system? In Mudarabah system, it is all about Rab-ul Mal and Mudarib, where both of this has the connectivity of the system. In RHB, it holds the Mudarabah Fund, where it stands for profit sharing, where a form of partnership between one who contributes capital, Rab al-Mal, who is a capital provider, and the Mudarib is the manager who gives the effects in the form of managerial skill. As the capital provider and manager will share the profit from the outcome of the partnership accordingly to the agreed profit sharing, whereby losses are tolerated solely by the capital provider. Such loss is not due to the managerial negligence of the specified condition. The objective of Mudarabah, it is providing a balanced mix of income and potential for capital growth by investing in stocks, where it is listed in Bursa Malaysia Securities Berhad or on any other stock exchanges, listed stocks and Islamic debt securities and other non-interest bearing assets, acceptable under principle of Sharia. The fund's activity shall be conducted strictly in accordance with the requirement of Sharia principles and shall be monitored by the Sharia advisor of the fund. The strategy: the fund is granted towards investors who look for Sharia-based investment that provide a mixture of safety, income and capital appreciation. The fund's objective is to achieve return from the Sukuk and Sharia-compliant fixed income securities instruments income stream, the dividend income stream, as well as capital appreciation. The adjustment of asset allocation between equity and Sukuk are formulated based on the economic analysis and valuation of securities. As for equity investment of the fund are limited to those in the list of Sharia compliant securities as determined by the Sharia Advisory Council of Security Commission Malaysia, which is updated and published twice a year. As for the consumer behaving towards the product, where the RHB use the Mudarabah fund. They use the Mudarabah fund is to encourage more Muslims and non-Muslims to open an investment account in their bank. The beneficial of the product is there will be no service or maintenance charge for the investment account, as they can track their own investment, and also the transaction via electronic channel will be at no cost to the investment. As for the residents, the product is open to all the Malaysian citizens and also the non-residents in Malaysia. The consumer behavior on the demand, whereby the investment account holders are able to withdraw at any point of time. The benefit to the stockholder. Mudarabah financing is part of Islamic financial system, where it rejects the concept that a borrower is liable for the repayment of the funds borrowed and predetermined return to those funds regardless of the performance of the borrower's business and share in the profit and losses of that business. Besides that, Islamic financial system, which views equity capital, which is productive in real sense, and the social and economic relationship that have to be built are not based on the debt relationship but upon equity and participants. Furthermore, Islamic bank practice Mudarabah in both forms. In case of individual, Mudarabah and Islamic bank provide finance to a commercial venture run by a person or a company based on the profit sharing. Although the joint Mudarabah may be between the investor and the bank on continuity basis, whereby the investor keep their funds in special fund and share the profit. Apart from that, there is a benefit of Mudarabah to the customers, which is it allows customers to enjoy savings on profit at the same time enjoys return on the investment. As for the conclusion, Islamic finance is based on the principle that the provider of capital and the user of capital should equally share the risk of the business ventures. It encourages scarcity of the contracts, sharing of the risk, prohibition of the interest and speculative trading and gambling. Islamic theories of finance encourage earnings through the participation in business activities and discourage the avenues of unearned income. In principle wise, the capital of Mudarabah in RHB Islamic must be provided in the form of cash. However, it may be presented in the form of tangible assets, in which case the market value of the assets is the contribution to the Mudarabah capital. Thank you for watching our video.